Ladies and gentlemen, welcome to the Fintech Frenzy. Today, I thought we would do something special, okay? Because it was an American holiday. Happy Thanksgiving to all the Americans that are watching. I'm actually from Canada, so, uh, we're celebrating quite quietly right now, and my setup will be a little bit different. I just recently put a ton of monitors in front of me. So now I have this crazy setup that I'm trying to get used to. It's a little intimidating, to be honest. But yeah, today we have something very special. I was doing a bit of research on Shift4, came across some crazy news that ended up getting verified as I was believing that I was a detective here, and then thought that I would turn this into a conversation of Shift4, what I'm doing with the actual stock, because it's ran up quite a lot since we ended up purchasing it, over 80%. So obviously, some of these metrics change in terms of how expensive Shift4 actually is. Okay. Because whenever I originally bought it, I thought, hey, this is a great payments company that is extremely cheap. And yet I'm able to get it at a discount right now. That maybe that gap is closed a little bit. Obviously, they have not grown by 80% since I purchased it just like 7 months ago. So, you know, there's some decisions that need to be made. I'll give you a spoiler. I'm not selling a thing. Okay. This company is still very cheap. To sort of put this into perspective, Fiserv was trying to acquire this company along with global payment networks, and they both had acquisition costs that were higher than what this stock is today, even though the stock actually hit brand new 52-week highs as of the last day that the market was actually open. Okay, so I'll just show you this here. What you can see here is that Shift4, although actually hitting a all-time high, historic high of 115. Oops, where did that go? Although hitting a historical high of $115.08, as of the last 5 days, or sorry, as of the last close, I should say, was 114.95, which was still an all-time high versus any day that's come previously. So just to look at it from a last year perspective, it has been doing phenomenally. Okay. So let's first talk about what this new sort of thing that ended up happening was. And then for the people who are watching this that say, hey, Tanner, we watch the SoFi content. What is this other company that you're talking about? I've never heard of Shift4 before. We're going to be doing a full breakdown and talking about this as well. So like a little bit of a semi-analysis. This is definitely not a deep dive or anything along those lines. More of a general view of this company for people, and maybe do a little bit of Q&A in there for any gaps that I may not have been closing for you guys. So I got sent this form here, which was a government of UK business filing for this business, and there was six six officers of this business. Okay, I'll show you this here. This is very interesting. So this is how we came across this. Card Industry Professionals Ltd. Okay, on the government UK website, and they had six separate officers that were on this business. Now, what you can see, even the CEO, the person who started this business, is now completely out as of the 28th of October. Resigned from the role, resigned. In actually, who came in was Luke, Taylor, and Jordan. Okay. Now, who are these people? Well, we can just do a quick little Google search here. Let's find them on LinkedIn really quick, and I'll show you. If people haven't already figured it out, they are Shift4 employees. Bear with me. I'm just trying to. Hello? My computer's having a hard time. I think it's the extra monitors. Here, let me show you this. So Luke Thomas, Chief Strategy Officer at Shift4. Okay. There'll be a better way to do this. Let's go like this. So Luke Thomas, Chief Strategy Officer. Jordan here, is the general counsel and legal for Shift4. And then Taylor is also Shift4. I think he is the chief growth officer. I could be mistaken. I think he's the chief growth officer. But yeah, all Shift4 members are now the board of directors of this new business as of the 28th of October. So everyone was trying to crack this code on this brand new acquisition until we saw that just earlier today, they actually posted about this announcement. Not Shift4, that is still yet to come, but actually card industry professionals actually posted that they had been acquired by Shift4. Let's go to this really quick. I'll show you. So I'll tell you what this business does, the implications here, and what's to come first. So, this is card industry professionals of this terrible video. I wish it wasn't like that. Oh my God. Love it. Okay. And that's essentially what Shift4 also offers. They offer a bunch of different business lines, but mainly the one that is driving a ton of success is their point of sale terminals, which they sell these terminals for extremely cheap prices and end up running up people's bills through payment processing, which is what a lot of these payment terminal companies are not doing. So one of those was, card industry professionals or CIP. So CIP, it was very hard to find metrics on how many merchants they actually have. Hopefully there will be a press release within the week of Shift4 actually announcing this, and then we'll actually get to know more information. But from April of 2022, supposedly card industry professionals had 3,000 merchants across the UK processing over 25 million pounds of transactions per month. Okay. They said since inception of their business in 2017, they have more than doubled their payment processing every single year. And they expected since April of 2022, 18 months later, they wanted to triple that number as well. So I'm going to assume that they're doing somewhere around probably £1 billion of total processed volume annually. And obviously, many more merchants. What Shift4 is wanting to do here is get in, take those users, get them off the current terminals that they're using right now, get them onto SkyTab, which is that very modern all-in-one solution. So not only being a gateway provider, but also doing payments providing as well, offering it all, and then making money over time rather than just charging for the hardware. You're also making money on the payment side. So this is essentially customer acquisition through acquiring companies and also potentially acqui-hiring. So taking some of the talent that's working there, the sales teams, the sort of thing that has allowed a CIP to double their business every year. Well, Shift4 wants that. Imagine what you could do if you were actually going and selling a product that works. So why is Shift4 potentially doing this in the UK and not just organically growing? Why go out and actually acquire if you don't have to? Well, it's because they just got into the UK. So this is what the massive change that is happening in Shift4 and why I'm loving this company right now. And we'll go through the valuation metrics. I'll tell you guys why this company is so special from an investment standpoint, but we have to understand what the actual business offers in the first place. Okay. So let's go through all of our check marks on the checklist here. So first off, we're going through a big catalyst right now. For the longest time, Shift4 has been a United States business up until the very end of 2023. Since then, they have gotten into a large part of Europe, UK, starting to get into Africa, getting into Australia, going into Canada, all over the world, essentially, okay? How they're doing this is there's a little hint in it in this image, in this satellite right here. They are the payment provider for Starlink. And so Starlink wants to get into all of these countries. And so if they want to get there, well, Shift4 is going to be their road there. So they have to go out and actually get these licenses and start being able to provide payments in all of these different countries, and they're doing that for Shift4. Now, I spoke to the CEO of Shift4, Jared Isaacman, okay? What he said is that, well, we don't want to just serve, we're not doing all this work to service one client. What we do want to eventually do is try to compete for the Spotifys of the world, the Netflixes of the world, and try to get some of these global payment or global commerce companies that are potentially needing payments taken globally, right? So what they're doing with Starlink or SpaceX is laying the groundwork for so much future clientele. This is the very exciting part. So they are expanding very quickly. If you follow them on X, for example, you'll see just how many new countries that they get like every month. And so hopefully they'll get a large part of the globe over the course of the next year, 18 months, something along these lines. 2025 is going to be a big year for expansion for them. Because it's going to be a big year for expansion for SpaceX because they need to take payments in all those different areas. But with this, there is so much else that's going on. So the industry that they're serving payments on is a very wide spectrum, but it's narrow right now. Now, I know that's a little confusing. Let me try to help you out. Let me go here for a second. Okay, so one, restaurants is the game right now. This makes up for a third of their processed volume. Since actually developing SkyTab and taking it out of beta, they've sent out about 55,000 SkyTab terminals. Now, 35,000 of those have happened in 2024 alone. That just goes to show you how recent of a ordeal this has sort of been, right? Now, restaurants, unlike Toast, which is their other main competitor in the restaurant industry for, cloud-based payment providing and just total restaurant management, they are really the only competitor that Shift4 actually likes to say is potentially also taking market share at the rate that they're taking it at. I have a lot of things to say about them versus Toast. We'll talk about that later. Anyway, they are not just in restaurants, though. They also do a lot of hotels and resorts. So this is also very exciting. What Jared Isaacman said, they said, if we called ourselves the Toast of hospitality, we'd probably get the multiple that they get. I'm kind of ruining it a little bit whenever I say that, Toast is at a very high multiple because they are the big, new player in the restaurant space. But the domination that Shift4 has in the hotels, resorts, and stadium space is unheard of. So just to put it into perspective, because I'm already, showing off a little bit here, let me get past all the wins that they've had this quarter. But we'll go to their next big segment, which is sports and entertainment. This is an industry that they joined in 2021, okay? They bought the two largest, and they didn't even mean to, by the way. They just ended up seeing that the acquisitions were so cheap. And so their original idea of getting into sports and entertainment was going to acquire this company called Appetize. Appetize was asking for a ton of money, so much so that Shift4 didn't want to buy them. And they dominated the entire sports and entertainment space. So what they did was they bought the next biggest, which was actually a very small company comparatively to the number one. The number one was like looking at, essentially Google versus Bing in a way. But it was this very scrappy, small company that was actually taking a lot of market share. And that was called VenueNext. Okay. So they acquired this company called VenueNext that got them into that got them into sports and entertainment or these stadium deals. Okay. Then the company that originally bought Appetize, which was Spot On, was losing a ton of money on it. So they continued to lower the amount that they were asking for Shift4 to buy Appetize from them on a consistent, quarterly basis. And eventually it met a price that Jared Isaacman was wanting to purchase it at. And now they're at a 75% plus market share for every stadium in America. And now they just started doing it with ticketing. So they're working with companies like SeatGeek, like what's the big one? Ticketmaster. And they're going after a large percentage of the payments in this space, and they continue to win new stadiums every single quarter. Now, right now, this is all in America. Like I said, they're going international. This is the biggest catalyst for them, is that they have so many of these clients that have these massive, massive things, especially in resorts as well. Whenever you have these massive resort wins, these are not just United States or North American wins. They'll have a lot of work also internationally, especially for some of these places out in like these resort areas, like in the Bahamas and stuff like this. Like there is a lot of resorts down there that also have locations up in America as well. So there's so much cross-sell there now that they've officially opened this up in just the later half of 2023. Okay. So cross-sell from existing clientele is super big. Now, they also deal in other payments as well. Nonprofits, retail, sexy tech, which is sort of their way of saying anything else. So crypto payments or a lot of EV chargers. They were working with Amazon to help the Amazon no-touch thing that came and went. So at the time, the whole camera system was sort of the big conspiracy, that this camera system was this AI that was detecting people picking up and putting stuff down. Just turned out to be a bunch of people in India that were monitoring the cameras for what people were purchasing. But the technology, the payment technology part was the stuff that actually worked. And that's what Shift4 had offered. Okay. Getting all this into other geographies will be the big expansion plan. But let's go on to some of the other things. So they acquire companies, like I said, for acquisition purposes. This is one of their recent ones, Vectron. Okay. It's a German company that had 65,000 merchants on their platform. And so what Shift4 wants to do, like I said, they go in, acquire this company, and then they turn all the Vectron systems to SkyTab terminals and then start processing payments. It's cheaper for the merchant because obviously they don't have to connect with multiple different companies in order to facilitate payments. So the rate goes down, but also they get a better one-stop shop that's actually much stickier. It's much harder to get off of it. So there has been some people that said, hey, Shift4 actually comes in, they offer really low rates, but then once you're there for 3 years, they jack the rates up and it's impossible to leave. Maybe that is true, but it makes for one heck of a business, okay? The next thing here, as you can see, they are going really strong into the UK and Ireland. So yes, organic growth there will be exciting, but how do you accelerate that growth? Well, acquire a company that's doing amazing, that has sales teams there, that'll add a little bit of that localization to the area, okay? So that's why they acquired, and hopefully we'll see a press release to get more information on how much they paid and, how many merchants they actually have, but that they acquired CIP will be very exciting. That's the brand new one. And they just acquired this Canadian company, GiveX, okay? This is a public company. They're profitable. They have free cash flow. They've got net income coming in. They just acquired this company. It has a best-in-class gift card program that that Shift4 wants to do two things with. One, they have 130,000 active locations. So they're going to get SkyTab into those locations, drop the GiveX platform, okay? Switch it over to the Shift4 way and make a lot of money there. And then also take the technology of the best-in-class gift cards and then go through the entire Shift4 ecosystem and say, hey, guys, we also have this new product that we'd love to offer you that GiveX is going to offer the technology for, okay? And then they also do all sorts of stuff that people would be excited about. Whenever you see fast-growing companies, and I'll show you guys some of these statistics here in a second, but whenever you see these fast-growing companies, you wouldn't expect them to be, profitable. They do have profits, they're free cash flow positive, and they do buybacks. Let's wait. I'll show you this here too. Let's go through and actually look at some of their finances because it gets disgusting. What people need to realize with Shift4 is how it got started. So Shift4 wasn't always the name, right? It's actually funny. They acquired a company called Shift4, and Jared was like, hey, I like that name. Let's take that. So they went through United Bank Card, and then they changed their name to Harbor Touch to sound more authentic. And then they changed their name to Lighthouse Network for all of like what seemed like a couple months from what I could read. And then they switched to Shift4. Anyway, so, and by the way, Shift4, it's the thing on the keyboard to make the dollar sign. That's a funny little meme, I guess, hidden in there. Ticker symbol FOUR, by the way. We'll talk about the stock. We'll talk about the valuation. Let's talk about the numbers first and the actual growth here. Let me share my screen. Okay. So here's all the actual finances that we're going to look through. So I've got everything from end-to-end volume to all their revenues, expenses, gross profit, net income, free cash flows, all their expenses. Okay. Let's take a look at this. So one, end-to-end volume. This is like if you're looking at a payment provider, this is the blood of the business. How much processed volume is going through your actual business? And it's gone one direction, okay? Shift4 is winning a ton whenever it comes to total payment volume as they get more stadiums, more hotels, more restaurants, big, okay? From a free cash flow perspective, they are printing more and more money, hitting higher highs, okay? Revenue continues to climb, expenses climb. However, what's a great way of looking at this too is total revenue net of transaction fees. So you really want to monitor all the other costs and depreciation of equipment. I don't know why I was looking at that like that wasn't the word for a second. But the network fees is very hard to sort of change. Like obviously they just sort of have to pay that in a way. I'm sure with economies of scale, it can potentially get cheaper as they process more volume. But yeah, that's not going to be sort of within their control as far as I can tell. Net income positive, margins are expanding. Love it. Okay, both on an adjusted and real basis. So very good. Now, where are they giving away some of their problems here? So let's take a look at this. Stock-based compensation, the killer of all major growth stocks, okay? Whenever we take a look here, like look at year over year total payment volume. It grew 56% year over year. The quarter before that, 50%, 50%. As we go through, they've been holding up these unbelievable growth rates and yet still compounding on top of those, okay? So like, people get very excited about Nubank's growth, about SoFi's growth specifically. A lot of you guys will be very excited about SoFi's growth. SoFi's growth is laughable compared to some of the statistics that Shift4 has to show off just in terms of their growth rates. And then how do you pay for those growth rates? Well, not a lot. Look at this stock-based compensation. It hit another low since being a public company, or since I'm tracking the data here. Stock-based compensation percentage of revenue, less than 1.6%. SoFi's is around 9%. Okay, so you're giving away, and now that's not even a bad statistic as well. You have some companies like Coinbase that are still trying to fight, 17% stock-based compensations as a percentage of revenue. But whenever you're looking at a company that gives away so little, and in fact, they are giving this away in stock-based compensation, and then they do stock buybacks. So they're actually starting to give that back to retail investors, and hopefully that shows off in the stock price as well, as diluted share counts will start to continue to go down. So that's what they're also hoping for, right? So sort of hit a high in Q1, and that's starting to fall as they are finding a mix between making large acquisitions like Finaro, which was like a $500 million acquisition to get them into sort of a global area. Appetize was a very big space. And then, also trying to give back to retail as they start to make some money on some of those transactions. Anyway, let's look at guide here really quick, because this is another important one. So not only do what we see for, this is full year of 2024. Do we have 2025 yet or no? Let's see. No, sorry, I don't. Full year of 2024, however, if we're comparing it to 2023, 51% year over year growth rates in end-to-end payment volume, 44% growth rates in. So also here, they did actually reduce guide. So the stock got crushed during earnings, but yet the market doesn't care because we're at all-time highs right now. 44% growth rates year over year for gross payment less network fees. And Adjusted EBITDA, 50% growth rates, which is actually an increase from their previous guide to 682.5 million. Free cash flow, 395.9 million dollars for the year. Just crazy. Crazy, crazy, crazy. So now, why don't we go ahead and take a look at what people are potentially paying for this company? Okay. First off, I want to show you this image because this will help prove a fun little point for me. Shift4 constantly gets compared to Toast. Now, according to Popular Fintech here, who is actually like, let's call him a friend of the channel. I talk with Jeff Jenis sometimes, or Yev Jenis, on X, and he posts these amazing statistics showing off the different growth rates between fintech companies. So Popular Fintech shows this off, and Shift4 just finally, for the first time, passed total payment volume over Toast. Okay. This was a very exciting mark because what I'll show you here in a second is that Toast is not a cheap company. All right. Now that's just total payment volume. So there's a lot of things that need to go into this as well. But take a look at this. Let's look at pricing ratios between Shift4, which is this first column here, and Toast, which is the hallmark. What Wall Street loves Toast. They get constant price revisions on the upside. They are the king of restaurants, even though that's all they do. And everything's going well for Toast. Well, one, price to earnings ratio for Shift4, 63 times. Toast doesn't have one. They're not profitable. Forward price to earnings is 23.5 times for Shift4. For Toast, it's 52 times. You're paying almost double. Okay. Free cash flow, 33 times. For Toast, you're paying 3 times as much for free cash flow. Okay, 94x. All the way down, you're seeing cheaper multiples than what you're seeing for Toast. You're absolutely paying nearly 2 to 3x for Toast, yet what Shift4 is actually doing is potentially growing much faster than them. I'll show you this here in another slide. Maybe Toast is not the only metric we want to look at, so Popular Fintech also brought in some of their other large competitors. Let's just look at growth rates for Shift4. Just because maybe some people thought that, hey, Toast had a bad quarter, so they passed them in total payment volume just in the most recent quarter. Well, it doesn't look like that. And in fact, it looks like Shift4 is the only one amongst Square, Toast, Shift4, and Clover, all the biggest, more modern payment providers for like point of sale terminals, that they're the only one that continues to accelerate growth rates that hasn't just fallen off a cliff. All right? It's very exciting. Now, just one more for you, because this also needs to translate into some level of revenue. And like I said, they're not unprofitable. So it's not like they're just throwing this onto revenue and they're getting this by having equally super expensive expenses and terrible margins. That's not true either. So revenue is also in the favor for Toast. Or sorry, in the favor for Shift4, my bad. So Toast is the dark black here. The sort of second dark or dark gray is Shift4. And then this light gray here that just comes in second place is actually Clover. Wish we chose a couple different colors there, G, but yeah. Toast market cap is more than 2 times bigger than 4. Well, so this is why I like to look at multiples rather than market cap, is because market cap doesn't tell you how much you're paying for a business. I mean, it physically does, but it doesn't tell you in relation to how much they're actually making. That's why I like looking at the multiples, because you're kind of looking at it on I guess the best way to compare two businesses is to look at two statistics. What's the multiple and then what's the growth rate? Right? So multiples can be super high if growth rates are super high. If people are willing to pay for, like SoFi is a great example of that. You can look at Lending Club. I mean, the metrics of Lending Club versus SoFi, it's like, wow, SoFi looks like the most expensive company ever. And then look at growth rates and you're like, oh, okay, well, that makes sense. But with Shift4, you're looking at it and you're going, okay, wait, faster growth rates, cheaper, more business, a larger total addressable market. Just makes me think, it's not like Toast is dominating in restaurants, and this is some area that Shift4 can't touch. They dominate in restaurants too, you know? But then they also have hotels, stadiums, and so many other big global aspirations. And what I really like, so if you guys know, or if you guys are course members or something like this, you'll know one of my large checklists, or one of my large pieces of that checklist, is founder owned businesses. Okay. Jared Isaacman is an unbelievable serial entrepreneur. I mean, like, not, I, I don't want to, like, just gloat him up because I'm a shareholder, but one of the reasons why I am a shareholder is because he dropped out of high school because he started this business when he was 16. He's been building Shift4 for 25 years. He's still super young. He's like 41 or 42. And in between those periods, he has started defense companies, aerospace companies, and then, he was training fighter pilots and buying and selling like jets for the United States government, all while doing Shift4. Like, it's just crazy. He is like a little miniature Elon Musk, and actually very close with Elon Musk in that sense, because he was just on the Polaris Dawn team. He actually funded it. So they went up and he did, the furthest out spacewalk that ever happened in human history. And so he's a very aspirational guy, right? He definitely shoots for the moon, and one day he's literally going to be there. But just to, like, sort of put that into perspective, it's like Shift4 is like, could be, if he's 42, this could be another growth aspect for him for the next 25 plus years, where we don't need new management. We're not looking for some succession team or something like this. He's extremely young. Okay. He said no signs of not wanting to be a part of Shift4 going forward. They have had buyout offers from different companies, and he's turned them all down because he thinks that the company is worth more than that. And those price targets, which are like 125 and I think 135 or something like this, were not even where the stock is at today. Okay. If another buyout offer had to come in, they'd have to be paying a lot more now, because obviously we want a multiple on the work that, Shift4 is offering that growth rates for. Here, let's take a look at this as well. S&P. So Shift4 actually had a little bit of news with the S&P 400. However, I can't seem to find the news article on it, but they joined, or was it 600? Maybe it was 600. I thought it was 400. Anyway, they joined an index, a Standard & Poor's index, not the 500, the main one that everyone thinks about. Yeah, it was the 400. Here, I'll show you this. So this is another reason why the stock has been running up a little bit lately, is the base of investors is starting to rise, right? People are being poured into this company because an index is pushing them into this investment. So they just got accepted into the S&P Midcap 400. And so this means that the low lows that Shift4 potentially was getting to, like the 60s and everything like this, is probably not going to return to those places because people are passively investing in it. And this is right now. If this company continues to grow at 40, 50% rates year after year, especially after the catalyst that we're seeing, like them going global as of, just within the last year or so, like, this could accelerate growth. We could see 50+% into next year as well, knowing how many acquisitions they're doing, because they have a pristine balance sheet. And this is another thing. People say, oh, well, Shift4 has a lot of debt. It's like, no, they have a lot of debt that has, one, maturity dates that are so far out, and that two, have coupon rates that are unbelievably low. So they're just simply not paying it down, because it would be more expensive for them to pay off their debt than to put it into another acquisition that's going to make them more money in the interim. So if they can make more than whatever it is, like 1.6%, then they're making on their new acquisitions, then they're making more than what their debt servicing would be for their convertible notes. Okay. But they also said, we do not expect those convertible notes to be dilutive. We're going to pay them off before a maturity date comes. But, why not float it while we can use the money in the interim? So, yeah. What is their market share compared to Toast in the restaurant space? I think Toast is a little bit bigger, but if I do recall, it's something like 30%, or no, it must be less than that. I remember it's like 25% of restaurants work with Shift4, and I think it's no, that can't be true. I don't know. I don't know. I don't have a clear answer for you. I thought I had the number, but I was like, that cannot be true. But yeah, very interesting company. I hope that everyone gets to take a look at this business because, uh, like I said, they just have obviously the product is working. You can see that in their actual growth rates on their total payment volume. People are not going away. They're not signing new contracts to different businesses. They're staying. So it's sticky. And in fact, I always show this off. I'll just do this one more time because this is a really fascinating thing. It's how much Toast, like, okay, let's say Toast is beneficial. To what degree? Okay. So how much are you paying Willie Man? Thank you, brother. Really appreciate that. Wow. So tomorrow, we're probably going to do option strategy SoFi Weekly with Tevis and Roy and everyone. Hopefully, we get Steve on that as well because that'll be quite fun. I'll be mainly a listener as this is something that I'm trying to pick up on that I'm not as good at as obviously them. I'm an absolute amateur beginner whenever it comes to options. But thank you so much. So not only will those 10 people be able to see the SoFi Weekly, but you also get the SoFi Weekly after hours, which if you guys saw last week's was just all about options. So that's very interesting. Thank you. Thank you. Thank you. Okay. I'm trying to find because they posted about their pricing on how they do their pricing versus Toast. Now they didn't name Toast verbatim, but they did. They said like our largest restaurant competitor, and they had like their competitor was like in orange text and everything. Like it was 100% Toast. We know it. They just don't want to name them by name. Okay, it's not that. Well, I look for this. Just field me. I found it. Field me any questions that you guys have. Okay, so for restaurant and bars, they showed off their biggest competitor, primary competitor, which we already know is Toast. Look at this. So this is what Toast costs on the. This is what Toast charges on the upfront side of their business. So already, whenever getting into a relationship with Toast, you're faced with an $11,600 bill. Okay, for SkyTab, it's free. Then on the monthly subscription side, you are essentially paying $900 a month. For Shift4, about $308. So you're going out paying over 5-year fee or over a 5-year subscription with Shift4. It's $18,500 payments. With Toast, it's $65,000. $65,000. Okay, so now is it profitable for Shift4 to do this? 100%. And that's sort of their way that they want to grow. They don't want to be as greedy. They want to take massive amounts of market share. They're sort of the like Robin Hood in a way of payments for businesses. So they do charge on the payment side, and they definitely charge aggressively there. But what they really want is the total market share, and their total addressable market is just way too big. So they can continue to grow that way. Another thing that I wanted to talk on with the Toast thing here, I had one other thing. I'll have to find it. It was just in my head. I just lost it. Pound Cake says 2 questions, and then he didn't say anything. I'm going to look into it more. We'll probably buy a little. Yeah, I mean, just do some research. I had a conversation with Jared Isaacman. So, like, you need to see how this guy operates. You need to see how he thinks. It's great. Like, one of them is just the immaturity of Shift4 has been a real hamper to their business. So this is one of the things that they sort of talked about. since, you know, Shift4 has been around since he was 16, like 1999 or whatever. Shift4 sort of built their own customer relationship management tool, CRM. And ever since, whenever they're acquiring companies and everything, they'd make them adopt this shitty CRM tool. Sorry, Jared, I don't mean shitty, but obviously very hard to grow whenever it's a homegrown CRM. Then one of the cool things about having such a close relationship with SpaceX is that they hire a lot of SpaceX employees. A lot of the employees at Shift4 are SpaceX employees. And they said one of the things that SpaceX does so well is that whenever they solve a problem, they never go back and look at problems that are already solved. They're always working on the next problem. Okay, so one thing that one of the Shift4 executives brought to Jared was saying, "Hey, this CRM has to go. So we need to do an entire rip and replace, which is going to be a 3-year process, which we're actually coming to the end of right now." Okay, of building out a really professional homegrown stack, like back end. And so they called it Project Phoenix, which is a mix of both Salesforce and Palantir. So congratulations to the Palantir, shareholders. Shift4 is a customer, which would probably make some of you guys very bullish because you'd know the advantage of that. And so they have a very professional, very expensive back end now, which is going to be very beneficial for their scaling. That's going to take away actually from a lot of their expenses in terms of, operating time at the expense of just paying some of these companies up front. So the profitability comes from volume and pricing power later on after becoming the leader. So as customers are seasoned onto the business, from what I've read, they slowly increase the fees on some of these merchants. Now that might not be on all of them, but they're profitable on all of their customer acquisition obviously costs some. So installing those terminals is an expense, but as time goes on, obviously on a per transaction basis, they're making money. And so eventually that pays for the terminals that customers have been installed with. But yeah, so if you mean pricing power, like versus Toast, there's not going to be the pricing power would be closing that margin. I guess if you would to say, hey, how can they increase these margins going forward? The pricing power would be, hey, you know what? Maybe we could charge for some more monthly fees once we actually do have market share. So to your question, yes. I mean, to some degree, yes, but we're not quite there yet. Secondly, is the product good? I'd say it's second place. If you're a restaurant, the best product is Toast. I don't think there would be a lot of people that argue with that. It's just, is it worth the money? Okay. Sometimes, it's good to have Bloomberg Intelligence and pay, what is it, $34,000 a year now, like to have a Bloomberg terminal. But it might also just be okay to have Koifin have the second best and pay $400 a month, or sorry, $400 a year. Like, so what is that, quality versus expectation for price? And so many merchants will choose Toast because they want the best of the best and they'll pay for it. And then other companies will want 95% of that experience for potentially 20% of the cost. They are at all-time highs. This is true. But as you can see from their multiples, if you go back, whenever we were comparing them to Toast, it's like people are very willing to pay for leaders in these payment spaces. Okay. Like here's another statistic. They won a lot of customers from Stripe. Shift4 did. So they are a dominant space, especially in the product categories. Like, it's not like this is some B tier product. They are winning against very large other payment providers. But that being said, if they continue to grow at 50% growth rates, what does all-time high mean? Does all-time high mean that they should revert back into some area where they're not at their all-time high? They're at their all-time high revenue. They're at their all-time high profitability. They're at their all-time high end-to-end payment volume. What's wrong with them being at an all-time high price? I think that they could legitimately double in their share price, and people would still have bullish arguments as to why they should be at that price, similar to Toast, for example. Which other companies do the same in their space? Well, I mean, there's a lot. So Clover, Square, Toast, those are probably the big ones. But in terms of market share, you have Toast at the very top for restaurants, and then Shift4 right below. For total volume, you're probably looking more in the likes of Clover having a very good margin there, but Shift4 is going to be like right at the top for total payment volume. Because one thing about Shift4, it's like we're not comparing apples to apples, because like Clover, are we looking at Clover or are we looking at the parent company? Because if like we're looking at like, parent company, they win. This the largest incumbent payment provider for point of sale terminals. But for Shift4, it's like, okay, in the restaurant space, they place second. But where do they place in the stadium space? Absolutely number one. They are the Google of that space. They have a monopoly. For hotels and resorts, they are number one. Like that's another thing that's very interesting too, that Jared Isaacman always says, like, if we called ourselves the Toast of hotels and resorts, then people would give us a premium double of what we are today. But because we say we're a jack of all trades, people give us this, beginner level multiple, because somehow everyone thinks that they're going to be, like jack of all trades, master of none, and lose to the specialty businesses that are designed to do that one specific thing much better. But the truth is that for the fees that they end up charging, like that price differentiation, they'll win a lot of business that way. You mentioned their CEO has been doing this for almost 30 years. Has it always been this good? Well, I mean, yes, it kind of has. So what has been different is the acquisition strategy. So here's a couple things. One, whenever he started, he was 16. Okay. They got no external funding. No, there was no seed round. There was no A, B, C, D, E, F. There was none of that. Wall Street was not a part of their growth. The only way that Shift4 knew how to grow was from the money that they acquired. So being profitable is not a thing that they've gotten like that they had to get used to. A lot of these businesses, like Square is probably one of the greatest examples, Toast, one of the greatest examples. These have been like Silicon Valley funded, okay? And they have been told to go out and acquire as much of the market share as possible and take it from incumbent players. And now the market is demanding profitability. And so they have to learn how to be profitable. Shift4 has been profitable since day one. That's what they've always done because they've had no external way of making money. They've only recently gotten Wall Street love because they've gotten to a size where indexes now want them on their books. And so they're being forced to purchase this company. So this is another thing that's a little bit conspiratorial, but Goldman Sachs, Morgan Stanley, a lot of these companies, they don't really have an incentive to push this business because they don't have any private investments. There's no external debt capital or anything like this where they can say, hey, you know what? We want to actually give good ratings to this company to boost them up, because it's not part of their book. So they can't really talk up their own book because this is homegrown, and that's why they're still like working off of homegrown CRMs. Like this is as much of a home business as a candle shop. It just happens to be a freaking $10 billion business that's homegrown. It's hilarious. So now that they're actually starting to get some real advisory, real money, like they're starting to go out and acquire businesses and have like this, like how do you do that? How do you acquire this many businesses and still keep stock-based compensation down at 1.6% of revenue? And I asked Jared Isaacman myself, I said, how did you do this? He said, I'm the largest shareholder. So why would I want to dilute myself? So, like, if the guy that has the voting share is the person that also gets to make these decisions, if I have shares, I know that mine are protected because he's protecting his own money. He's doing his fiduciary duty, not only just for the shareholders, but just think of himself as a selfish person. Like, he's going to do best for himself, which is also a bet on my money as well. That is a very exciting, position to be in. Do I have a video interview with Jared on YouTube? Yes, I do. You can just type in future investing, Jared Isaacman. Here, I'll show you it. I'll tell you the title here. I did it probably 3-4 months ago. And it was funny, right? Like, even like Vlad and all those guys, like, they've been great. Okay. Robinhood has been great. But whenever we go to talk, they're like, hey, don't talk about this could get us into trouble. With Shift4, like I said, they're as homegrown as homegrown. So I, like, originally, to talk to Jared, I had to go through like his personal assistant to that. Like, there was a lot of layers that I had to go through, but I was like, hey, what can I ask about and what can't I? They were like, what? Like, just have a conversation. I was like, all right, cool. But yeah, so here, I'll show you. So the video is called Jared Isaacman reveals Shift4's next big move in payments.
For you in the basement days, but it is a boat anchor now.
But yeah, young man. And we talked for how long? 40 minutes of talking with Jared Isaacman while he was in quarantine to go to, that's not a good frame for either of us. There you go. Kind of doing him dirty now. Anyway, you get the point. So good management, happy there, extremely fast grower, good on the expense side, profitable, free cash flow positive, hitting a catalyst that allows them to go global, which is opening themselves up from like 10% of the total addressable market to now, the rest of the globe. SkyTab is going to start landing and rolling out in UK and Canada and Australia, and like these are just going to get started. Can we potentially get similar numbers of what they did in the States in all those geographies all at the exact same time? Very exciting. Very, very exciting. And that's been one of the things that I've felt really worried about for Shift4. But like, time will tell you. They've been doing this acquisition strategy since essentially Q1 of 2018, if not even earlier than that. Like, whenever they acquire customers, it's been nothing but success. So I'll show you. I think they did this I think they showed a great graphic in this in Q2 of 2024. Whenever they acquire these businesses, they go through this period where they strip their existing business model, just completely rip it out, and they actually start to lose money on their new acquisitions. And then, yeah, here we go. I'll show you. So they just did this with a company called Focus, and they call it legacy revenue. So this is the way that they used to make money, which was on one-time revenue, which was the selling of the hardware side. Okay, they completely just rip that out and they start giving away these products for free. Okay, so the revenue just skyrockets, plummets, and then they start to put in their payment revenue. Okay, so saying, hey, instead of working directly with these payment companies, why don't you just work with Shift4? We will handle the gateways. We will be the payment processor, and then we slowly make money. And then so it really starts off small. This is the problem, is whenever they make large acquisitions, it can actually hurt their revenue in the short term, but then in the long term, they skyrocket with recurring revenue. This is monthly reoccurring revenue that they start to see, rather than one-time payments where you have to continue to go out and get new market share. Like what Shift4 is doing is they just need to land and expand. They need to get as much of the territory as possible. And then this is ARR, right? This is a SaaS company. That's not like the businesses that they used to buy. This is another thing, right? They bought the company, the revenue drops over the next year. Over time, it skyrockets now that they actually start to bring on the SaaS model. Monetizing payments. Gotta love it. Okay. So check out Shift4, please. They acquire companies like crazy. It's very different. They're going global right now. They're getting into all different stuff. They're not opposed to like this is another thing. I see this from Toby Lutke. I see this from Jared Isaacman. They understand like these entrepreneurs that have been in this space for decades is that whenever something new comes along, they don't try to fight it. There are that always worries me to death. Whenever I see these founders that go, "Hey, we are not in support of crypto." It's like I get it. Like, but how about you personally don't buy crypto? Don't harm your business from knowing what's like you're making a really bold bet on what you think the future of commerce is. Where Jared Isaacman, I asked him this in our conversation. I said, "Hey, like, why don't or like he said, I don't know where it's going to be. I don't know if we're going to still be doing US dollars or if this is going to be in stable coins or we're all just going to be transacting in Bitcoin, but we're going to offer it all." Like, that's where you want to be. So they're not trying to skate, to where the puck is, but where the puck is going type thing. I don't know, the Wayne Gretzky thing. I'm a Canadian. I'm sure I'm going to get flack for that, but I'm honestly not a sports guy. I'm a stock guy. So, and yeah, ladies and gentlemen, that is the video. That's 1 hour of Shift4. There's so much more I want to talk about, but I've already doubled my time. Happy Thanksgiving. Appreciate all your time. Thank you all so much for watching, and bye for now.